Hey guys, welcome to CPA After Hours. I'm with my partner Austin, and my name is Zee. Let's go ahead and hop in.
So today's episode geared a little bit more towards business owners or people looking to start businesses or just people that are curious about tax. And so the title that we've got tentatively is Understanding the S-Corp, the good, the bad, and the overhyped. And our goal today is kind of help you make the decision of whether S-Corp makes sense for you, not to impress you with knowledge, not to overwhelm you with stuff, and not to really make a sales pitch. So, cold open, I was just going to let you say why everybody asks about S-Corps.
Well, I think it really starts with the confusion and lack of understanding with LLC. So my favorite question that I hear, and I know this is Austin's favorite question too, is, should I start an LLC for my business? And Austin has a great analogy for that.
Oh, Lord. So I got to decide how much of this I want to do. So if I had a whiteboard or something in here, I would do this on the whiteboard. I do this when I teach my class at Hendrix or anytime I have a business owner at a consult. And what I am trying to frame is every business can be taxed in one of four ways. There's actually a fifth way that's a little less common we're not going to talk about today. And that is a sole proprietor, a partnership, an S corporation, or a C corporation. And so the example that I talk about that Z loves so much is my lemonade stand. And so the reason I do that, I had a grandmother who's passed, whose name is Linda Lemon. And so if I ever do this in writing, the case study will be Linda Lemonade, and she'll have her lemonade stand. But I go through this hypothetical business that owns $100,000 in net profit, and I show kind of the difference in tax across all of these different businesses. And so if I just go out and start selling lemonade on the side of the road, that is a business. Like if I am charging people for goods and services, the IRS doesn't care whether or not you filed any paperwork. So that's going to be taxed with regular income tax and then what's called self-employment tax. So if you've been an employee, you know that when you get that paycheck, there's a lot of things they took out. They took out federal income tax, but they also took out Social Security and Medicare. Social Security is 6.2%, Medicare is 1.45%. What you may not know is the employer is also paying that same amount of Social Security and Medicare tax on your behalf. It's split. When you're self-employed, the IRS says you're both people. You're the employee and the employer. So what that means is if you're making $100,000, you're probably going to pay more in self-employment tax than you will pay in federal income tax.
Yeah.
So that's the first step, is understanding that self-employed people kind of get hosed on taxes, and you have to make more as a business owner to account for the tax expense you're going to incur at the end of the year to make the same as you would as an employee. So that's kind of the first level setting.
Yeah, I'd go into that even further and say, when you file your tax return, some people think it's just federal income taxes. There's like a ton of different taxes on that. It could be net investment income tax, it could be capital gains tax, federal income tax. You have states on there depending on what state you live in. You also have
additional tax on
additional Medicare tax and 10% penalties.
Early withdrawal.
Yeah. So
I call that the stupid tax.
And then you have self-employment tax, which is like the big kicker. So we could go keeping down the rabbit hole as far as different tax structures, but you know, S-Corp. Why do I need an LLC? Do I not? LLC changes nothing. It just changes your liability, and that is a legal question for an attorney's podcast to answer.
And it does open up. One thing I will say on the LLC: if you don't have an LLC, some of these other options are not going to be available to you. So yes, a lot of the elections you're going to make to be taxed one way or the other do require that LLC. It sort of opens the door to some cool tax things that you can do.
Right. But do you even need those cool tax things? I have a friend. They asked me how much to prepare their partnership return. She does photography. She has a friend that she does photography with. They opened up a general partnership between the two of them, and I think they made about $5,000. Well, for us to do a partnership return, we gotta charge like $1,300. Depending on the complexity, it could be a little less, could be a little more. You're telling me a quarter of their income for the year is going to accounting prep? That doesn't include the personal tax return? Whoever's idea it was to structure it that way, terrific, horrible. Terrible
Somebody who
idea.
wanted some accounting fees.
Yes, it was either the accountant or the attorney. Shouldn't have done it. They should have just not been partners, or somebody 1099 the other. There's a way to make that work. But as far as business structure goes, partnership was not the one to take there. LLC wouldn't have changed anything. It would have still been a partnership return. But back to S-Corp, it really depends on your situation. There's a couple of different metrics and markers people use. Some people use different income thresholds. It depends on sometimes what state you live in. If you live in Tennessee, they love S-Corps because they have a gross receipt tax there that just eats up everybody's pocket. So,
Let's not get ahead of ourselves. We're hopping into when to do it, when to not. Let's rewind for a minute. What even is an S corporation?
well, you have different business structures. LLC is a state election. S corporation.
It's a tax status.
There's a couple different things. It could be an entity election as well. So you can have an LLC or an S corp or a C corp, general partnership. All these are filed with the Secretary of State, with your respective state. Or you can have an LLC taxed as an S corporation, which is generally what we advise people to do. An S corp, if it's an entity level S corp, you're going to have a board of directors, meeting minutes, so many meetings per year. There's a lot more requirements and legality to it than the LLC doesn't have. So depending on what type of business you're trying to build, kind of depends on your entity that you want to set up. So S corporation is just a small business corporation. It allows people to have this income flowing. I don't know how to explain that. This income will pass through from the business to you personally.
I think that's a good thing to kind of visit on for a minute. So, how do you go from your lemonade stand on the side of the road to a lemonade stand that's taxed as an S corp? Well, the big thing you got to understand is the S election is a tax treatment. It's not going to change anything on the legal side. And a lot of people get confused because if you hire an attorney, they will put something in about your entity classification in the operating agreement. That's a podcast idea for a different day. But essentially all you're going to do is you're going to have an LLC or a partnership or a corporation, and you file an election, which is a piece of paper that says, hey, I want to do this thing. And then the IRS is going to say, sure thing, if you fill it out correctly.
File it right.
They get rejected a lot, and there's sometimes some argument that happens back and forth. But it's not rocket science. It's really not. And the core idea is to save on those self-employment taxes we talked about earlier, which for a lot of people is their highest single source of tax liability. So I thought maybe now that we've kind of established what's going on with an S-Corp, how do we get there? Why do people even want it if it's so much hassle?
There is additional items you have to do. You probably need to have a separate bank account for your business and your personal. I mean, I think you should do that for whatever business you have. But once you have an LLC in place, for legal reasons, you got to keep those separate. If you have them commingled, they could say this entity doesn't exist. They're conglomerated. They're the same. The business and this personal. So you're going to get sued anyway. Doesn't have the LLC protection that most people go for. On top of that, you get into this part where you have to have certain reasonable salary requirements hit. So what is a reasonable salary? There's probably tons of podcasts about that out there. We're not going to go into it deeply. But it's basically, what can you hire somebody to do what you currently do for your business? Or another way to think about it is, what's everything you do in a 40-hour work week? If you work 40 hours. If you don't, okay, prorate it. And if you work more than that, prorate it. 10% of my time is on the accounting, 20% of my time is on admin, 40% of my time is on technical work. You rate all those on a proficiency basis on how much it would cost to pay somebody to do those items. That's your reasonable salary. things like Gusto, RC reports. There's a couple other softwares out there that'll build you out a audit defensible reasonable salary. Why is it necessary? That's a great question. When you go from a LLC to an S-Corp or Schedule C, which is when you file on your personal return, to an S-Corporation, a separate return, you have a pie chart. 100% of that is self-employment tax. When you move over to an S-Corp, whatever your reasonable salary is, that's how much you're paying on self-employment tax, and the remainder of it is going to be only federal income tax. So you're really saving on the SC or the self-employment tax portion there.
So one of the things I'll throw in, because this a lot of times kind of confuses people, is, okay, so the reason I pay self-employment tax to begin with when I start a business is that I'm the employee and the employer. People usually can understand that part. And then we say, okay, there's this option for you if you want to cut down that amount of payroll taxes to become an S corporation. But you have to pay yourself a salary. So it's like, okay, so I had a big tax benefit, and now I'm going to have, let's just say, 80% of that tax benefit. Why am I having to jump through all these hoops? And sort of the thought process of the IRS is businesses hit a certain size where all the income really isn't a result of one person's effort, right? So like, let's think about a really big law firm. If you have 20 attorneys on staff, does it make sense for the one partner that owns it to pay payroll tax on the entire business's net income? No. The results of that firm are the result of everybody's combined efforts. So they want to give him a similar tax outcome as if he were invested in a law firm as somebody that wasn't in that business. So that's kind of the justification from a theory perspective that I don't hear people talk about very much. But they're not going to let you do it 100%. The IRS isn't stupid. They know that there's a tax benefit that exists here, and so that reasonable salary requirement exists to prevent abuse.
Right. And you have a great law firm example that I'm going to steal when they talk about reasonable. That same law firm said that's $1 million a year, really profitable. The managing member pays himself $50,000. Probably so he can max out some retirement accounts. His spouse can, or her spouse can max out some retirement accounts. Then the junior partners are making $200,000. Whoa! Why is big man or woman making $50 and the junior partner is $200? That's not reasonable. Audit. So those are the things I think I look for on those reasonable comp audits.
Okay, so that's kind of why you would want to go S-Corp. You're going to save money on payroll taxes, in theory. What are some downsides to the S election that people maybe don't market as much as they should?
Yeah, well, who are you paying to run your payroll? Are you doing it? Are you doing it wrong? Are you paying a software to do it? You don't know how to set it up right. You have to have an accountant do it. All that costs money. We recommend Gusto. It starts at $50 a month plus $6 per employee. How many employees do you have? That could add up pretty quick. Also, you have a whole separate tax return filing that you have to pay us to prepare. So that depends on complexity and cost, and if you're doing planning on that or not. I mean, that could range from, I've seen some people prepare returns for $300, which, like, if you're getting your S-Corp done for $300, there's something wrong on it. I can't tell you what it is on a podcast. I can confidently say it's not right.
Here's what I'm going to throw out there really quickly, too, on business tax returns. Because we had a little bit of friction in the local community when we first came out, because our business prep fees are higher than some of our competitors. And the reason for that is what I saw at other firms, even firms that were more expensive than us, is they essentially plug and play with whatever you give them. So they're not even going to do a sanity check on the numbers. They're going to make it match in the tax software, and they're going to file it. That's what they view their responsibility as, to get the tax part right, not to touch any of the bookkeeping. Well, unfortunately, these bookkeeping softwares are really complicated, and it's really easy to make big errors, like duplicate all of your income for the year, or miss expenses, the bank feeds will break, or duplicate expenses. And so what I was realizing was, because I had done bookkeeping before I ever went into tax, was we were filing returns on these books that made no sense. So in our firm, what we've done is we've built in a basic books review on every single return we do, where we pull the general ledger, we identify accounts that look like they've jumped a lot from year to year, or accounts that are frequently audited by the IRS, and we dig into the detail on those specific accounts to do not all of your bookkeeping for the year, but to at least give you a sanity check and a list of things that maybe you can improve on an ongoing basis. And so I guarantee the whole point of this tirade I've done is, if you're paying $300 to $500 for a business tax return, there's no way anybody's doing that for you. And so if your thought is you're going to get some tips or advice or whatever at that price point, it's not going to happen. And nobody's going to tell you that because they don't want to lose the business. But it's just impossible for them to offer that level of service at that price.
To give you some insight onto what billing looks like from an accounting firm, you've got partners or CPAs that charge X amount per hour. That could be 150, 200, 250, 300, depends on the size of the firm, complexity of the work project, etc. You also got staff, people who are working on it, getting it in the door first, doing the groundwork on it so you can do the review. You also got admin time, which they may or may not be billing and applying time to. So if you have a CPA that charges $200 an hour, which is very low, $300 high, $250 in the middle, and you got staff at $150 an hour, which is about right, $175-ish, and admin that's $100 an hour. Well, when you get on a $300 return, I'm assuming the managing partner or the reviewer has looked at it for 30 minutes, maybe 15 minutes. So at $200 an hour, that's $100. And you got the prepper who's looked at it for maybe an hour, $150, and then the admin to scan everything in and do all the communication, 30 minutes, $50. That's a $300 return. So if you want the reviewer or CPA to look at it for 30 minutes, that's about the price point that you're at. So that's kind of how the insights of the CPA billing model. If they're billing by the hour, some firms do that. We do not bill by the hour. It creates administrative headache. It causes issues with client relationship. We just do a fixed fee for the year for the engagement. Seems easier that way.
So big things you need to bake in. You need to bake in that payroll cost. Let's round it up and call it $100 a month. So $1,200 a year, basically, to pay yourself payroll. You're going to need a $1,200 roughly prep fee on the business. That's about the lowest I would tell people to budget. So now you're up to $2,500. You need to build in your franchise tax fee if you weren't an LLC before. So that could be anywhere from $100 to $500 depending on the state that you are in. So let's call that $3,000. So here's the problem. If you've got $3,000 in extra costs every year to be an S corporation, saving $3,000 in tax does not make that ROI positive. If you count for the time, $4,000 probably doesn't make it ROI positive because you've got all this hassle now. So you can save up to like $30,000 with the S-Corp tax election. So of course that's a no-brainer, right? So what you want to do is pick somebody who is willing to sit down with you and give you an honest assessment of how much do we think this is going to save you, how much do we think the additional compliance cost is, and is that return on investment satisfying to you as the business owner? Because one of the things I hate about the accounting profession is people come to me and they want me to solve all of their problems. And I can't do that. I would love to be able to do that. What I can do is advise you, but you're the business owner. You've got to take ownership of it.
Yep.
And so our goal is not to run your business for you and make decisions. It's to empower you to make wise decisions yourself. Okay.
Right.
So do you want to give a rule of thumb of when an S-Corp makes sense?
Well, there's also a couple of first year cost that you have to incur to be an S-Corp. I mean, S-Corp election. You have to have somebody fill that for you. Free tip out there, if you're going LegalZoom, they will not do a late election. If you want to treat prior years as an S-Corp that you haven't filed yet, you can do that. There's just only certain places you can go to get that filed correctly that'll actually withstand IRS scrutiny. So you spend $100 with LegalZoom. They give you the piece of paper and tell you where to mail it, and you have to fill it out yourself. That's actually what they charge $100 for that. Is that not nuts?
That's
the paper's out there for free.
The other thing we probably need to hit on is if you Google this, what you're going to find is that you have to have done it by, I think it's March 15th, basically, if you want to do the calendar year. That is not a real deadline for basically anybody who knows what they're doing. So that will scare a lot of people out of it, and places like LegalZoom will say that they're not going to do that. And to me, that's just somebody who respectfully doesn't know their stuff.
Yep. You could save a couple $100 on the S election and wait a year to do it, or you can spend a couple $100 more, have a year of S election status that saves you thousands. It's up to you. One decision might be better than the other. You had talked about rule of thumb, and this is interesting because even with the rule of thumb, there's exceptions.
Right.
If a taxpayer and spouse both are in the business, that's going to change my opinion, because now you have two reasonable salaries for each one. But typically, if it's like a single individual with a business, anywhere from 60 to 100,000, that's where you want to start looking. If you're in states like Tennessee, if you're over 150, 180,000, you might not want to do it at all. You can get up to like 250, but Tennessee is kind of its own monster. Then you also have to think about New York and California. Those aren't as bad as Tennessee. But yeah, and it also kind of depends on what industry you're in. Reasonable compensation for somebody that works in the restaurant business is probably a lot lower than somebody in medical sales or somebody that's
or
a
doctors,
physician. Yeah, so we have a physician that their salary is about $240,000 a year. For what they make, that's reasonable. You could probably lower it some. Their audit risk assessment, they're very conservative, and so they would rather pay more than what's needed. But when you get to those points where you're maxing out your Social Security and Medicare, you could argue that you don't really need an S-Corp. You have additional Medicare tax and things like that the savings can add up, but it's not this big 15% number you're saving. It's more like 5%.
Yeah, so, okay, if we're not going to do a rule of thumb, then maybe we'll list out some things that, if they were true, would make the case for an S-Corp stronger.
Yeah.
How about that?
I like that.
So, I'm going to say consistent profit over $50,000 a year. Because sometimes what you'll see is a business that 1 year is really good, 1 year is really bad, and then if you look across the years, certain years it's not profitable, right? And so it's not really possible to switch back and forth from S corporation to sole proprietor. You can invalidate your S election, but then you revert to a C corporation. That's a little bit more technical than we need to get into today. But just know you can't undo it super easily. You've got a 5-year timer that starts running. I think clean books, like an actual established business with employees and double entry accounting, that is a much stronger case for electing S. I think side hustles, as a general rule, are not a great fit for an S corporation. A lot of times people will do it because they've got some advice on TikTok, or they want to feel legit, or they're sure it's going to take off in the future. And while I hope every business works out, the data on that shows that it doesn't.
Right.
And so why put yourself in the poorhouse before it's actually going to save you any money? I would always make it an ROI calculation.
And also remember, if it does take off, you can call people like us to do a late election.
Right.
It's not a set in stone, oh, now I owe X because I didn't foresee I was going to make a ton of money this year.
So I think one of the things that I probably want to emphasize is S-Election is great for a lot of operating small businesses that do not involve real estate. It's a really good pick, but it's not always the right pick. So to me, when we're talking about S-Election, the timing is almost more important than should we do it or not.
I could agree with that. And you hit on a very important thing that this podcast wouldn't be sufficient if we did not talk about. Real estate holdings, real property inside of an S-Corp, typically a no-no. That's a no-no. I saw an office building in one recently. Her preparer was like a tax attorney. I'm not going to dig all tax attorneys, but every return that I've seen prepared by a tax attorney has not been good. So I would not really recommend that based on my experience. That's Arkansas. That's our area. So it could just be our area, but I have not seen any good ones that I've reviewed. We'd also want to talk about accountable plans. Whenever you go to S-Corp, you lose out on a lot of things when you're Schedule C. Mileage being one of them. You can't do mileage anymore. You can't do home office reimbursements. You can still take those deductions on S-Corp. You just have to have a special plan called an accountable plan. If you have an S-Corp and you've never heard of that, you should ask your accountant. If they can't tell you what it is, you should find a new accountant. S-Corp accountable plans are super important. If you don't have one and you're taking mileage, IRS can come in and wipe that mileage calculation out. And for some people, like an insurance adjusters that travel all the time, that could be a $30,000 deduction. That's worth asking your accountant about an accountable plan.
Okay, let's close this out with a 2-minute little activity. I'm going to role play as a clueless client.
Oh.
And you've got 1 or 2 sentences to respond to my crazy statements.
1 or 2.
I'm electing S corporation status because my friend said I have to do it.
You should find a new friend.
My CPA set my S corp up without explaining anything.
You should find a new CPA. What would you like to know?
I'm an S corporation because I say 15% no matter what.
Let's take a look at the tax return because that's probably not accurate.
I don't need to pay myself a reasonable salary.
If that's a risk you're willing to take, the payroll penalties are atrocious.
I think that was a really good one. So, to wrap up, you need to know why you're electing S corporation if you're going to do it. The timing probably matters more than the election itself. You want to make sure it's an ROI positive decision for you because there are compliance costs. And then you're going to want to revisit that structure, maybe not annually because there's a 5-year timer, but every 5 to 10 years, especially if you explode, there's some times where alternative structures can make sense. So if you're unsure, talk to a pro. I would not recommend doing these on your own. We've seen people do it successfully. We've seen a lot of people botch it. And so it's probably worth at least visiting with somebody who's been there and done that before. If you are a member here at the AIC, or actually I don't think you have to be a member, you can sign up to talk to either one of us for 30 minutes and we can run you through some of the risks associated with your specific situation. So there's no reason to be afraid to get help because of cost. There are people out there who want to help you.
Awesome. Thanks for being on the pod with me. And this has been CPA After Hours. Catch you later.